Hello and good evening, traders. Thursday evening, it is 19 minutes past 9 p.m., 20th of April 2023. And as always, we are looking at the Nifty first from three different time frames. The attention is on the daily time frame, wherein we have four consecutive negative candles. And this means that the consolidation correction continues further. Not much of a fall considering the way we went up. So far so good. There's not much of a worry even at this juncture. But if you closely look at the way the prices behaved in today's trading session for the Nifty, you have a spinning top with a decent sized upper shadow and a decent sized lower shadow, which means the tug of war was there, intraday volatility was there. Neither the bulls nor the bears are willing to give it back that easily. Now, let's first talk from the point of view of the underlying uptrend. It reversed the trend with a pretty decent degree of momentum. Then it has gone through a 4-day correction. The underlying trend from the daily time frame is under threat but not reversed yet. And now we have early signs of this selling slowdown. What I make sense out of this is the index right now is at a short-term make or break. From a short-term point of view, maybe 1, 2 to 3 trading sessions, the directional clarity will come once the index either breaks below today's low or goes above today's high. And I will weigh them 50-50. I know this to some degree of confidence that in case we get a break of this low, then the degree of sell-off can be a little sharp. Bounce back can of course be there, but there will be stages of resistances which we anyways have discussed in our yesterday's session, 17,650, 17,700, etc. So if you recall, at the beginning of this week, we used few terms like stock-specific market. Irrespective of where the index goes, you're very likely to get some movement here and there on either direction. And I think that continues. Today we maintain a portfolio of stocks that we trade within our masterclass of short-term momentum trading, and we've been kind of cautiously bearish, taking some positions and quickly closing them. Currently we have a long position open and we closed a short position in ABB. I'll quickly walk you through this particular trade wherein we tried to actually capture this fall. It was not much at all. We were expecting that this downtrend will pick up further momentum, but nevertheless, what I'm trying to say with this example is this stock specific behavior will continue. Now, in tonight's discussion, I would like to talk about two things. One, amongst the sectoral indices, the CNX auto is looking wobbly. Fourth consecutive small bodied candle after such huge high momentum move clearly indicates it's a momentum slowdown. Your 75-minute time frame will look like a rising wedge. Momentum is on the downside. Generally, most of the time, these kind of setups just give a knee-jerk reaction to bounce back. So this knee-jerk reaction can be quite a bit. So auto and the financials that I think I discussed yesterday, taking names like Maruti, Hero MotoCo, HDFC Bank, none of them have actually broken below yesterday's low. If you remember yesterday night, we discussed that. If those lows are compromised, then these sectors can come down. But even at today's close, if you take a look at the doji behavior from CNX Finance, backed by some divergences on the top and momentum slowdown, ideally, if the lows are broken, if tomorrow breaks today's low, then stocks like Hero MotoCo, Maruti, Bajaj Finance, HDFC can show further downside. So that holds. Okay. from the shorting point of view. Interestingly, the second pointer that I wanted to discuss with you tonight is I've noticed probable breakout failure in two sectors. CNX FMCG, if you remember, 3 days back, it gave a beautiful breakout. And this breakout was reflective on the weekly time frame as well. But rather than holding on to its breakout, it actually slipped the next 3 days and it has broken below the breakout bars low. I generally look at the breakout bars low and the previous low, which tells me that it has been a breakout failure. And I would not be looking to chase this fall, but if it gives me a bounce back and the bounce back is very shallow, there's not much meat in it, then the next move is definitely worth tradable. The other one is the CNX metal. If you remember a couple of days back, day before yesterday, it gave a big move from where it slipped from its intraday highs. And this is reflective in other stocks like Tata Steel. On the 75-minute time frame, you'll find this particular breakout that I'm talking about, and it has come off. Not as a classic breakout as it is in CNX FMCG, metal still, however, it's too early to comment. We can definitely comment on the FMCG, but too early to comment on the metal pack, that the breakout has been a failure for FMCG for sure. Before I end tonight's discussion, I would like to share with you that this is a situation. I think tomorrow will be really important. Day after would be, I think, Monday, the next trading session. That is, the next 1 or 2 trading sessions, I think, are pretty crucial. Nifty has given us this 4-day correction, which is a much needed healthy correction after this move. But it's been stock selective, specific correction. If you take a look at the top 22 names, yesterday we discussed Reliance, right? If you recall. So Reliance participated a little bit. In this particular fall, it is Infosys, HCL Tech, TCS, the IT stocks which have come off. Recently, we've seen a bit of correction coming in Sun Pharma, Hindustan Unilever, the FMCG breakout failure. But the ones that did not come down and are looking wobbly right at the top are the finance like HDFC Bank, Maruti, Hero MotoCorp. We've discussed this. Now, my worry, my concern, my inhibition lies in the fact that Nifty has already given a fair bit of a corrective move. So if this low breaks, I'm quite sure that auto and finance and others will pick up. I don't have any doubt about it. And the Nifty is in a make or break situation from a short-term point of view. If this movement comes, if it goes on the upside, then what I'll be looking very closely is which sector, which stocks will lead that move. Because auto, finance looks stretched. FMCG metal seems to have lost from its highs and are giving signs of a breakout failure. IT completely got broken down. Pharma also relatively weak. Real estate had a great run and looks kind of extended. So which sector and which stock is it going to lead? I think the answer is again stock specific. If the market finds itself back to, let's say, 17,800, I think it will be very specific Nifty 50 stocks like an L&T or a Reliance, or which enjoys a higher weightage will participate. But it will be really interesting, especially at the end of tomorrow's session. And I'll make time to create a weekly wrap and share it with you later over the weekend. Will be really interesting. Let's see what's in store. I hope you've been trading well. Take care of yourselves. Good night.